So, Michael, Facebook has a lot of irons in the fire, and yet you are concerned that Facebook's earnings, their margins, are shrinking. Do you think Facebook can change that in the future?
Oh, it's fully discretionary. I mean, I don't think that we're going to see legislators compel them to do anything that they weren't planning to do. I really think, when we talk about compressing margins, they're investing in a bunch of things like virtual reality and artificial intelligence. And they're obviously trying to build out some of the businesses that aren't monetizing as well as the Facebook platform, like WhatsApp, and obviously building out advertising on Instagram. I think it's not the compressing margins that spook people. I think it's Dave Wehner's commentary on the last earnings call. And, this company's tracking to low to mid 40s in operating margin percentage this year. And he said to expect mid to high 30s going forward. And just to kind of put that in context, that would require them to grow their spending by about 50% of their revenue growth in the next 5 years. That just doesn't compute. If they grow revenues by 50 billion or 100 billion in the next several years, how are they going to spend half of that again above what they're spending now? Crazy. It's crazy talk. He said it. I'm not sure why he said it. I'm not even sure that that's his decision to make. That's the board's decision to make. And I think that with the share price, stumbling down to the 160s, I think that their board's going to get an earful from their shareholders. And I think Dave's going to change his tune. So I think it was imprudent of him to say that they were going to see margin compression in the next several years. I think they're going to change the story when they have their next earnings call.
Dave Wehner, the CFO of Facebook. Sarah, Michael Pachter, not mincing words there. Do you think it's crazy talk? Do you think it's imprudent?
Do I think?
Do you think?
Well, I mean, here's what happens with these earnings calls. Facebook says something that gets everyone concerned about whether they're going to be able to make their numbers in the future. It takes down expectations a little bit, and then the next earnings call, they don't spend as much as they said they were going to. They maybe beat the revenue that they said they would, that they said they wouldn't beat. So I think that there's a little bit of expectation setting here. It's true that Facebook's overall business is going to grow less fast. It's true they're going to have to spend a lot more to grow in new areas, but whether it's going to be doom for the business, I mean, they have so many different properties that they could turn up the lever on, but all of that is going to be a lot more experimental than what they've already done. So I just think they don't know how successful these other business initiatives are going to be, and they don't want to promise that they'll be just as successful as the newsfeed, which is one of the most lucrative products ever.
So, Michael, as Sarah mentioned at the start, what investors are concerned about and what Congress is concerned about are two different things. But are you concerned, as an analyst who covers the company, about Congress's scrutiny of Facebook and tech more broadly, about the Department of Justice now asking more questions about tech giants and their power? That can't be good either.
Emily, I think I'm a recovering lawyer. I did it for over 15 years, and I've been licensed for over 30. The Justice Department has very little power to do anything. I think there's this perception on Wall Street that there's such a thing as too big, and antitrust breaks up big companies. That's just not true. If a company is so big that it has market power and pricing power, then sure. And we saw that, with AT&T's breakup and Standard Oil's breakup, a century ago. That's not the case with Facebook. I mean, you can say they're the only social platform, but it's not like Google hasn't tried. And Google failed because Google did a poor job. But anybody who wants to compete can. Google with 93% search, share, whatever the heck it is. Bing is trying to capture share. Yahoo used to try to capture share. So, I don't think these guys have pricing power, nor do I think they actually exert pricing power. I do think Congress can legislate. I don't think the Justice Department will find anything, but I think Congress can legislate and require that these guys take steps to ensure user privacy and security. That's appropriate. But remember, these guys are businesses, and with the exception of all the commentary from Jack Dorsey yesterday, who seems to think that he's a public interest organization, or he's running a public interest organization, these guys are trying to make money. And the way you make money is you keep your users happy, and you keep your advertisers happy that they're going to reach your users. So you've got to do both. And to keep users happy, you have to make sure you protect them. And it's protect them, protect their privacy, protect them from hate speech, protect them from threats, whatever it might be. And I think you might see legislation that says, that you have to do those things. I think these companies are going to do that. The president's commentary about, Google's algorithm being biased, I apologize, but it's just idiotic. It shows his complete lack of understanding of how algorithms work. And, the fact is that we all have sample bias. If I watch Emily Chang on Bloomberg all the time and I search it all the time, then if I type in Bloomberg, Emily Chang's going to pop up. I mean, obviously. And so we get search results based on our behavior. Whoever did that search for Trump clearly reads the New York Times and watches CNN, and that's why that popped up, not because Google is biased. So I really don't fear a financial impact. I think Sarah's right that companies who promise something and then don't deliver, stocks go down. The solution to that is don't promise. And Dave Wehner did not need to talk about 5 years out because he doesn't know. Remember what Amazon did a few years ago. They were losing money. They were doing stupid things like the Fire phone. The stock was in the 200s. As soon as they stopped spending all of their profit growth, all their gross profit dollar growth, the stock started to rip. It's up 500% in the last 3 years. So if Facebook decides to do the same thing, I think its stock's going to go on a pretty steep upward trajectory.